Hi, ladies and gentlemen. Welcome to the HSIAS webinar, Introduction to the FTA for the Health Supplement Industry. So the session will be starting soon. And then my name is Laurie. I'm actually the MC today. I'd like to thank everybody for registering for the webinar. And may I invite Mr. Daniel Quek to start the session?
Okay, thanks, Laurie. Again, warm welcome to everyone. Thanks for joining us today. I think registered online, I counted there are 55 people in this webinar. So that's excellent. Shows that there's a great interest. I think the main thing I wanted to say in this introductory remarks is, well, firstly, I better thank Singapore Business Federation for being so kind to send their speakers, as well as Union Chemical, to share their experiences. But as the Apex business platform, I think SBF has much experience helping companies go overseas and how to use free trade agreements, I think will be a very beneficial thing for our Health Supplements Industry Association members, because there are treaties that will make things easier for you, whether it is lower tariffs or zero tariffs, or other benefits, including IP protection and faster entry into markets. These are the things that we want to learn about. And I gathered that our members are not so familiar with FTAs, although they have already been doing trade with various companies. So today, I think we can avail ourselves of the opportunity from the speakers and from one practitioner, somebody who's actually making use of the FTAs, right? So I don't know whether everyone, I know majority are HSIAS members, but just a couple of lines on HSIAS. We're representing the health supplements industry in Singapore, and we cover more than 90%. All the products that you see out there, more than 90% our members have covered. And we're the only recognized industry voice when we speak to government, when we speak to health, Ministry of Health, HSA, etc. Okay, so that's just a brief introduction. Can I see the screen? Sorry, can you put the slides back up? I think I wanted to just run through the program. I'm sure you all are familiar. But basically, we will have the two speakers from SBF, and then we will have a panel discussion, including Mr. Jason Chan. So without further ado, I think what Laurie was actually going to add is that if you have questions, please put them in the chat box. We will answer them during the panel discussion session. And we will also, if we can't answer them, we will get back to you somehow. But I'm pretty sure with the experience here, we will be able to get the answers for you already. Okay, so if we can go ahead with our first speaker. May I take this opportunity to introduce Ms. Raghini Munusamy. She's the Assistant Manager of the SBF for International Policy and Engagement, and she assists the team by organizing events, workshops, and industry consultation on Singapore's FTAs with government agencies and key partners, as well as handling FTA queries by companies on Singapore FTAs. So perfect person to start us off. She's got a degree of of Bachelor of Science in Business Studies with Human Resource Management on Loughborough University. Okay, so may I invite Raghini to share with us, and don't forget to put your questions in the chat box. Thanks, Raghini.
Thank you so much, Daniel, for the introduction. Good afternoon, everyone, and thank you for joining today's webinar. I'm Raghini, and my colleague and I are from Singapore Business Federation, the FTA and Education Outreach team. So we'll be presenting to you the introduction to FTAs for the health supplements industry webinar. And our team regularly conducts events and trainings, which we'll be sharing more about it later. So for today's session, I'll be giving you an introduction to Singapore's FTA and covering the Trade in Goods chapter of an FTA. My colleague Ivy Heng will be sharing more about the rules of origin, steps to obtain tariff concession, introduction to tariff finder, and FTA resources. So what is actually an FTA? It's a legally binding agreement between two or more countries to reduce or eliminate barriers to trade and facilitate cross-border movement of goods and services between the territories of the parties. So Singapore has 28 FTAs and Economic Partnership Agreements, EPAs, with 65 trading partners in force. As you can see in the map, the darker areas are the countries that Singapore has trade agreements with. So in general, FTAs are categorized into bilateral FTAs and regional FTAs. Bilateral FTAs are agreements with the single party. As we can see in the slide, that Singapore has signed bilateral FTAs with these countries. In the case of EU-US FTA, it includes all 28 members of the EU states. These states are under a common union and considered as one party, hence the EU-US FTA is a bilateral FTA. Next up is the regional FTAs, which are agreements among several parties. Commonly used FTAs are the ASEAN and ASEAN Plus FTA, like the ASEAN-Korea FTA. For clarification, ASEAN Plus means ASEAN and another country, for example, ASEAN-China or ASEAN-India. The newest FTA in this picture will be the Regional Comprehensive Economic Partnership, also known as the RCEP. To find out more about each individual FTA, you can download the legal text and the infographics that will be shared later. So some of you may have the question that there are so many FTAs in place, which one should I use? In this slide, the FTAs are organized in such that you can have a quick overview of the different FTAs which are relevant to different countries. You can use this to identify the FTAs that your business can leverage on. In the table, you can see that ASEAN has signed several FTAs. For countries like Brunei, Malaysia, and Vietnam, they not only have FTAs with ASEAN Plus, but they also signed agreements with major FTAs like CPTPP and also RCEP. So how does this vast network of FTAs Singapore has helped us? By having a variety of FTAs, even with the same country, like taking example New Zealand, businesses can compare the preferential tariffs among these FTAs. They also have the advantage of comparing the different rules of origin across the various FTA to see which requirements their product can meet. While there are a number of benefits to using FTAs, I will just briefly go through three main areas. The first is trade in goods. Singapore businesses can improve their cost competitiveness of their products in the foreign market. This is also a result of an improvement in faster time to market duration. For trade in services, FTA enable better market access in global markets. And Singapore businesses are allowed to offer their services and operate overseas. This in turn increases their market opportunities. Removal or reduction of tariff means that the playing field is level for Singapore businesses when compared to foreign countries' own domestic suppliers. Lastly, there's investment protection. FTA ensures that businesses do not face any threat of nationalization. It also allows for free transfer of investment and funds, provides investor-state dispute mechanism. Overall, these three factors, among the other benefits of the FTA, ensures that there's certainty in the trading environment. So how does FTA actually makes your price more competitive, product more competitive? So just now when I was explaining, I said that FTA can help your product to be more cost competitive. So you can see on the right side of this scale, without any FTAs in place, these are the costs that the importer incurs domestically or internationally. So if the product is sourced overseas, there might be duties imposed. These duties are collected by the customs authority in the importing country. Referring to this, the scale, costs like excise tax, sales tax, VAT or GST are imposed on local and foreign produced goods. But for customs duties, it's only imposed on foreign produced goods. This is where FTAs come in. They may help to reduce or eliminate these customs or import duties and allow your product to have more competitive pricing in the local market. So let me explain this to you further by using an example. So we are exporting herbal cough syrup from Singapore to Indonesia with the HS code of 3004.90. Without any FTAs in place, the MFN rate is at 5%. So MFN rate is actually referring to the most favored nation rates from other members of the World Trade Organization, WTO. So if you're exporting $200,000 worth of cough syrup, you have to pay $10,000 worth of customs duty. This does not allow you to have any tariff saving. Now moving on to the FTAs, like ASEAN Trade in Goods Agreement, ATIGA, ASEAN-China Free Trade Agreement, ACFTA, and the RCEP, the preferential rate is at 0%, which means that if you're using any of the FTA stated in the table, the customs duties is eliminated and you're able to save the $10,000 of tariff savings. I'll share another example on the deep sea fish oil capsules from Singapore to Vietnam. So without any FTAs in place, the MFN rate is actually at 30%. So if you're exporting $500,000 worth of goods, you have to actually pay $150,000 worth of customs duties. Whereas if you're using any of the FTAs like ATIGA, ACFTA, or RCEP, the preferential rate is at 0%. So the import duties will be eliminated and you can have tariff saving of $150,000. At this point, I would like to highlight that to utilize the FTA, you need to ensure that your product meets the rules of origin of the FTA. We will share more about these rules of origin later. So moving on, I will share about the facilitative FTA provisions applicable to your export business. So the first example is direct shipment. So direct shipment is when your products go from country A to country B. Using the example on the screen, we'll use the ASEAN-China Free Trade Agreement. If you're exporting your products from Singapore to China, the manufacturer in Singapore will have to submit the Preferential Certificate of Origin, the PCO, together with the invoice to the customs authority in China for your goods to reach the importer in China. Another scenario is the back-to-back shipments. For this case, I'll be using the ASEAN-Japan Comprehensive Economic Partnership, AJCEP, exporting products from Japan to Singapore, and the products are re-exported to Thailand. The manufacturer in Japan will have to submit the PCO and the invoice to Singapore Customs, and then Singapore Customs will issue the back-to-back PCO for the re-export of goods based on the PCO issued by Japan. So this back-to-back PCO will then be submitted to the Thailand Customs. So some FTAs you have to take note, they require you to store the goods in the bonded warehouse. So it will be good for you to check the requirements beforehand. The last example another possibility is also utilizing the back-to-back provision. So using AJCEP again, the manufacturer in Japan can submit the PCO to Singapore Customs. Then, once the trader in Singapore has received the goods, they are able to split it into partial consignments. For example, the manufacturer in Japan sends 700 units of goods in January 2003. The trader in Singapore can split it into 200 units to be sent in February 2023 and another 500 units to be sent in April 2023. So we would like to highlight at this point that if you're doing partial consignment, you can only send the goods to the member parties of the FTA. So now we are using AJCEP. So the member parties are ASEAN and Japan. And there cannot be any further processing done to the goods. So if not, the origin of the goods will actually be altered. The last example that I would like to share with you is the third-party invoicing. Third-party invoicing refers to a situation where the commercial invoice is issued by the party other than the manufacturer or the importer. So I'll be using the Atiga for this example. The goods are directly shipped from Thailand to Indonesia, and the HQ is actually in Singapore. So the ownership of the goods passes from the manufacturer in Thailand to the HQ in Singapore and then sells it back to the importer in Indonesia. So the goods are actually shipped together with the original from the PCO from Thailand to Indonesia. So this third-party provision can be found in most ASEAN Plus FTAs. Next up, I'll be sharing some applicable provisions to take note. So if you're a manufacturer or an exporter, you need to ensure that your products actually meet the rules of origin under the respective FTA that you're actually utilizing. So you also have to apply with Singapore Customs the preferential certificate of origin or self-certify depending on the FTA. If you are a trader or distributor, you have to request for the PCO, preferential certificate of origin, from your supplier, and then you have to apply for the back-to-back PCO with Singapore Customs before re-exporting your products.
Thanks very much, Raghini. Yeah, thanks for that. I think that's a very good introduction to FTAs and yeah, trade in goods. So I think Srilata, I'll keep your question till the end, but maybe Raghini, you can already take a look. Then you can answer it later. Right now, I'd like to introduce Ms. Ivy Heng, Assistant Director for International Policy and Engagement from Singapore Business Federation. Ivy helps to raise the awareness and educate Singapore businesses on the benefits of using Singapore's vast network of FTAs by establishing collaboration with partners and key stakeholders, conduct general outreach seminars on Singapore FTAs like today. And I think she is also keen to consolidate companies' inputs and feedback on FTA-related problems. So if you guys have any particular issues or challenges, I think Ivy will be the right person to collect them. She also monitors and provides impact analysis on trade policy issues and developments. And finally, she graduated with a degree of Bachelor of Science in Finance from the National University of Ireland. So as we mentioned, the rules of origin are very important for FTAs. So Ivy, over to you to share with us how we can get through these rules of origin. Thank you.
Thank you. Thank you, Daniel, for the brief introduction. I just want to check, can everybody hear me loud and clear?
Yes, much clearer than Raghini, actually.
Thank you very much. Okay. So I just share with you. So I'll be touching on the rules of origin, like what Daniel had said, that actually is kind of like origin requirements. They are really very important for each of your product to meet before you can leverage on a free trade agreement. So in short, rules of origins, they are rules like determine if your product is made in any of the free trade member states, as it is only upon these requirements that you can meet, then your products can have the saving on the import duties. Next slide, please, Raghini. Yeah. So like we say that they are really the key to unlocking the tariff findings, and it's really have details on how your goods can qualify as an originating product. And after that, I will also share with you like what documents are required in order for you to prove the origin status, resulting in your importer be able to get this preferential treatment, which is like reduced import duties or waiver of the import duties. Next slide, please. So over here, you can see a very short infographic whereby how we can determine the origin of products. So we have split it into the wholly obtained product. And then we also have on the right, which is the non-wholly obtained product, or in other words, you can call it substantial transformations of goods. So for the first one, you can see that I've gave some, I hope it's a nice picture of examples like, plants that are being grown and harvested in the FTA member state itself, or animals that are being born or raised, or it's like waste that is derived from the production of the country export. And on the right side, you will see that under this non-wholly obtained product, which is also what I mentioned earlier, which is the that needs to undergo substantial transformation in the country. There are three methods. Over here, you can see the first one is the change in tariff classification. 2, regional value content. In short, we call it the regional value content, RVC. And also third one, process rule. So allow me to explain more in details in the next few slides. Next slide, please. So for this change in tariff classification, CTC is only applicable to non-originating material. So this is something that companies need to take note. So what are non-originating materials? They are materials or components from that you make that contribute into your end products, whereby they are imported from a country that is not a party to the free trade agreement, or it can be produced in the FTA member state but not able to meet the rules of origin, or its origin cannot be determined. That means that you're really not sure where is it from. So and to qualify it, in short, meaning to say that the non-originating material cannot have the same harmonized system classification. So harmonized system classification, in short, we call it the HS code. So it cannot have the same HS code, be it in the chapter level, which is the first 2 digits you can see in the extreme left example that I've given here, or in the middle column, whereby it's the change in heading for the first 4 digits, or it's a change in the subheading of the first 6 digits. So when you look at the rules of origin in the various free trade agreement for your product, you will see that if this rule apply for your product, it will be either a change in chapter, which is the first 2 digits, or a change in heading, or it's a change in subheading. And we strongly want to encourage companies that if you want to use this method, you need to be very familiar with the HS code of your various raw material and also the final product. Let me take an example in the next slide. So over here, you can see that using the same example that Raghini had shared earlier, exporting herbal cough mixture using ATIGA. So ATIGA is an ASEAN Trade in Goods agreement. That means that it's an agreement that is within the 10 ASEAN member states, and with a HS code of 3004.90. And over here, you can see that the rules of origin is a change from any other heading. So any other heading, as I mentioned in the previous slide, which means that it's a 4-digit level. So you look at the first 4 digits of your non-originating material versus the end product HS code, which is 3004.90. So before I move on, I just want to remind again, the same product in ATIGA with these rules of origin, a change from any other heading, it might not be the same in the ASEAN-China FTA, or it might not be the same in any other free trade agreement, because all the free trade agreements are negotiated differently. So when our negotiator negotiates, like maybe perhaps with Japan with this HS code, the rules of origin might be a change from any other chapter, which is the first 2 digits. Then maybe when they negotiated with example China, the rules of origin can be a change from any other subheading, which is a 6 digit. Okay, so let me come back to this example again. So over here, you can see that I list out a few raw materials for this herbal cough mixture. And then again, it's using Artiga. As I mentioned earlier, Artiga is a free trade agreement within the 10 ASEAN member states. So over here, if you see, you will notice that I have raw materials coming from China, from Japan, Malaysia, and Singapore. So over here, I will know that China and Japan, they are not members of ASEAN. So meaning to say they are non-originating material. So I look at the HS code over here and I look down my list and I see that, okay, for the first raw material is 1301, the second raw material is 1211, and it's different from my end product, which is a 3004.90. So does this fulfill the origin? Raghini, can you click? Yeah, so in this sense that yes, it actually fulfill the rules of origin because the non-originating raw material doesn't has a 3004 within it. Okay, so let me move on to the next rules of origin. So the next rules of origin, which is called the regional value content, which is RVC. Okay, so what is this RVC about? So this RVC calculation means that for your end product, a certain percentage needs to be originated within the party to the free trade agreement, and there is a formula for it, and all these are actually stated in the free trade agreement legal text, which you can see over here. We do have a build-up method and we do have a build-down method. Okay, so I'll take the next slide and share with you using the same example. Next slide, please. So again, I use this herbal cough mixture to Artiga with this, again, the same HS code 3004.90. And this time round, the rule of origin is a regional value content of not less than 40%. So when we say not less than 40%, which means that it has to be at least 40%. So this time round, I list out all the material, the value of all my raw materials was also coming from the same countries that are listed initially in the other example, which is like from China, from Japan, from Malaysia, and from Singapore. And then remember the previous slides, we have the two formula, which is one is a build up and the other one is a build down. So I calculated it, and the regional value content over here is 55%. And the rule of origin stated that a regional value content of not less than 40%. So over here, as you can see, 55% is above 40%. So in this sense, my herbal cough mixture will be able to meet the rules of origin. So just to share that we have companies coming to us to say that they are not very familiar with all these calculation. So just to share that later I will go on to the documentation part, whereby actually Singapore Customs, they do have an Excel formula. They have an Excel file which they have already incorporated all these regional value content formula inside that Excel file. So it's to help our businesses, whereby once you put in the value for regional value content, it will be automatically calculated. Next slide, please. So another rule of origin under this substantial transformation is actually the process rule, which might not really apply to this industry. So it's usually applicable for the chemical and textile products. So this rule states that it is considered as originating if it is produced through very specific chemical process or very specific chemical reaction. And it has to be done within the FTA member states. Like in this scenario, it has to be done in Singapore in order for your product to consider as originating. So again, for process rule, you also need to go to Singapore Customs and then share with them. They most likely will require a diagram on how the various molecules is being break up, being formed, and then their chemists will look at it to see whether you meet the rules of origin. Next slide, please. Okay, so I think it is very important for me to share with you on this thing called the minimal operations and processes. So minimum operations and processes, you can be found. It can be found in all the free trade agreement legal text. It's a special provision for it. So what is this minimal operation and processes? So they are processes whereby they are actually deemed or recognized that they are really too simple and they cannot be count towards meeting the rules of origin. So like taking example here, you can see that I list out some like simple painting, polishing operations, or simple peeling, or this assembly of goods. So we do have companies who come to us to say that they actually import maybe perfume into Singapore, and then they decided to pack them from bigger bottles into smaller bottles, and then they label it. They design in Singapore, they label it, and then they send it overseas. So by transferring perfume, like example, from bigger bottle to smaller bottles, these are actually considered minimal operations and processes, which companies needs to take note. And then in this scenario, right, you won't be able to tap onto the free trade agreements. Next slide, please. So I thought it's also useful to share about the operational certification procedure. So inside each of the free trade agreements, there's also this OCP, whereby we call it OCP, whereby companies should take note of, because it basically covers procedures on the issuance and verification of the certificates of origin, and also other related administrative matters that shall be observed by each party of the free trade agreement. Next slide. So steps to start your FTA journey. So I came up with this, a few steps that I think I think businesses should consider. So number one, you check where is your product manufactured and where is it going to. Like example, if your product is manufactured, processed in Singapore, and then next you should check where is it going to, ASEAN, China, or maybe India. So as what my colleague Raghini had shared previously, Singapore, we have 28 free trade agreements, and within ASEAN itself, we have 8 FTA in place. So companies can consider picking one of the free trade agreements, but of course you need to see whether there's substantial whether there is a preferential saving, and also whether your product can meet the rules of origin. And step 2, important, you need to find out the HS code of your product. So why is HS code is important? Because this HS code will determine the import duties that the importing customs will apply onto your goods. So we do also have experience with companies sharing with us that they have difficulty in understanding the HS code of their product. So we hear that, and then at SPF, we actually working with vendors, and then we are looking into developing a course to help companies to derive their HS code of their product. So stay tuned or sign up for our mailing list. Then next, sorry. Hello. Sorry, can I request all to mute the, thank you very much. Yeah. So for step 3, you have to check whether your product is offer tariff concession under the FTA they are looking about. So later I'll share with you a tool which is called Tariff Finder. So our companies can use this Tariff Finder to find out whether your product is offer tariff concession under the free trade agreement. So remember I mentioned earlier, your product might have tariff concession under maybe ATIGA, but it doesn't mean that it has tariff concession under ASEAN-China free trade agreements. Step 4, very important, you need to ensure that your product satisfied the rules of origin, which I mentioned earlier and also went through with it just now. And step 5, that will be the documentation requirement that you need to comply with. Next slide. Okay, so over this slide here, I thought it's useful to also share because we do have companies coming to us and query about what is ordinary certificate of origin, what is a preferential certificate of origin. So I list it down here. That's on the left, the ordinary certificate of origin, which is also what we known it as a non-preferential certificate of origin. So this means that it just merely help to attest the origin of your goods, and you won't be your importer won't be able to get any tariff saving out of it. So this document can be issued by Singapore Customs or the authorized organization, which is like Singapore Chinese Chamber of Commerce and Industry or the Indian Chamber. There's a whole list which can be found in the Singapore Customs website as well. Then what is the preferential certificate of origin and the self-certification? So these two proof of origin will allow your importer to pay lower or no custom duties under a free trade agreement. So the preferential certificate of origin in the middle column that you can see, in short, we also call it a PCO. And it's required by some free trade agreements, like, I list out some of the example here, the ASEAN, Australia, New Zealand free trade agreement, ASEAN, China, or the Korea-Singapore free trade agreement. And it has to be issued by Singapore Customs. And the next slide, I will go through with you on how you can go about getting this preferential certificate of origin from Singapore Customs. Another thing on the extreme right, you will see is the self-certification. It's becoming more increasingly in the various free trade agreements negotiated within the governments. So you will taking note that it will be issued by exporter or the manufacturer. So that means that you don't need to go to the competent authorities of that country. Like in this sense, you don't need to go to Singapore Customs to get this cert. It's actually issued by you yourself as the exporter or you yourself as the manufacturer. But definitely there are rules to it. You need to ensure that you are very familiar in using the free trade agreement. You are very familiar with the rules of origin. So depending on the various free trade agreement, there isn't any standard format, but they do have some minimum data requirements, like taking example, the CPTPP, these free trade agreements, they do have a minimum data requirement like in Annex 3B that companies needs to take note. So certain data requirements such as importer, exporter, which rules of origin did you use, which be it the change in tariff classification or the regional value content. And also, when you do the regional value content, the percentage, all these things that needs to be. So some free trade agreements that adopt this self-certification, I also list it down here. It's not a comprehensive list, sorry. So if you need, you can look into the Enterprise Singapore website, or you can go to www.fta.gov.sg. Next slide, please. So the previous slide, I mentioned that you need to obtain a preferential certificate of origin for certain free trade agreements, and it can only issued by Singapore Customs. So over here, I will share with you on the 4 steps that you can obtain this preferential certificate of origin. Number 1, you need to register your manufacturing premises or your new product line with Singapore Customs. There is a form in Singapore Customs website, which I think we can share with you after this webinar, because the slides will be circulated as well. So your end need to approach Singapore Customs, fill up this form, give them all the required and supporting documents in order to register your manufacturing premises. That is the very first step. And just take note that Singapore Customs might pay a visit to your premises to check. This is to ensure that the processing or the manufacturing done in Singapore indeed goes beyond the minimum processing, which the list of processes that I show you in the earlier few slides. Then once you have registered, next you need to submit the manufacturing cost statement. So this manufacturing cost statements is exactly an Excel file which I mentioned earlier, whereby if your rules of origin that you're applying with is a regional value content, you can key in the information inside, and there is a macro formula inside it that it will, calculate and know and help you to see whether your product actually goes beyond that 40% or not. Or you can also use this manufacturing cost statement to fill in the HS code if you are applying the change in tariff classification rule. Then once you submit to the manufacturing cost statements to Singapore Customs, they will check. And of course, if they have query, they will check in with you. If not, then they will approve it. So once it's approved, the next step, your decorating agent will need to apply for a certificate of origin via TradeNet, which is what we call a PCO form. So taking example of the example that we used just now for the herbal cough mixture, it will be using Artiga is call form B. Okay, next, your importer will then, your decorating agent will need to collect the certificate origin and then send it over to your importer to clear customs in order to obtain the preferential saving, which is the import, which is the reduce or the waive import duty. Next slide. So for the self-certification, I indicated 3 steps over here. So number 1, instead of going to the Singapore Customs to verify your factory, you need the onus is all on you now as an exporter or as a manufacturer. You need to check and ensure that your manufacturing in Singapore goes beyond the minimal processing or a substantial transformation. Number 2, you need to check and ensure that your product meets the rules of origin. And number 3, you need to ensure that the requirements for the self-certification is complied. Like I mentioned earlier, there are certain minimum data requirements that it has to be in your form. Next slide, please. So I move on to the verification request and record keeping requirements, which I thought is also useful for your end to take note of. Next slide. So, okay, pardon all these lengthy words. So anyway, in short, is to let you know that there is a possibility that the importing customs, taking example, maybe China, Japan, that they might raise a post-verification request and they might ask for additional information, or they might even send a formal request to Singapore Customs requesting to visit your factory, or they might even ask for all your supporting documents, like how did your end actually determine that this product qualified as an originating good under the various free trade agreement. Next slide. So like I mentioned, hence, because there is this post-verification check, then it is important that your end need to take note of some of the record keeping requirement. So over here, I stated that exporters and producers is to retain your relevant documents no less than 3 years. But in general, we always encourage a company try to keep it for 5 years. Anyway, in Singapore regulation, they also encourage company to keep for 5 years. So the records can be maintained, in any other, in any medium, like, digital, electronics, optical, or even written or paper form. Yeah. Next slide. So before I move on to tariff finder, remember I also shared with the steps in using the free trade agreement. So I thought that it's useful to have a checklist for your end to consider the steps before you start using a free trade agreement. Like taking example, is your importer paying any import duties on the product and how much? So if your importer currently is not paying any import duty, so meaning to say that when you check and you realize that the MFN, which is the most favored nation rate, is actually already 0%. So in this scenario, right, there isn't really a great need to use a free trade agreement. Okay. Then second, is your product covered under tariff elimination under a specific FTA? For this, I've repeated previously also as well, like this product might cover under a tariff elimination under Artiga, but might not be under ASEAN-China FTA. So companies need to check whether it is covered, and then when it's covered, what is the tariff elimination rate? Does it immediately goes into 0 import duty, or is a staging stage, could takes up to 3 years, 5 years, 10 years, or 15 years. Then third, what are the rules of origin criteria, and whether the product can actually fulfill them. So remember, I went through 3 rules of origin. change in tariff classification, regional value content, and also the process rule. So these are the three. It might not be all three for every single product. So you need to check, and then you need to analyze whether your product can meet it. And lastly, how significant are the tariff saving using the free trade agreement? I can share with you that we have experience when we talk to the company, and then they realize that the import duty could only be 1-2%, and then it's only a one-off shipment, and then they decided that maybe it's not time to use free trade agreement yet. So it really depends. If you have regular shipments, big volumes, and your import duties can go up to like the 30%, like the one that we showed, that my colleague showed as an example on the fish oil. So then companies should consider to use the free trade agreements. Okay, next slide, please. So now I'll move on to the introduction to Tariff Finder. So Tariff Finder is a tool by Enterprise Singapore, and they work together with this vendor. We call it the Mendel. And Mendel, they are not just any research company. They are a group of professionals who are experts in customs, and then they actually really read through all the customs circulars, legal taxes, and to put all the information into here. And on the right, you can see that there are 4 modules, which I will explain in the next few slides. Next slide, please. So to access the Tariff Finder, you can actually simply just Google Enterprise Singapore Tariff Finder, or you can go to Enterprise Singapore website, or you can just scan the QR codes on the right. Next slide, please. So this is the registration. This is the registration page. So anybody can sign up for a Tariff Finder. It's complimentary and is available for Singapore businesses. So all you need is to have a corporate email address and also the company unit UEN number, which is your UEN number. So in case if you don't know, you can also find out your company UEN number at www.uen.gov.sg. So try to fill up all the fields in the Tariff Finder, and then until you get the green tick, and then you click proceed with it. So you will receive an email that asks you to verify it. So once you verify it, then that's it. Or you are ready to go and use the Tariff Finder tool. Okay. Next slide. So once, like I mentioned, once you click on it, you activate it, you verify it, you can start going to Tariff Finder, and then over here you can see that you can start searching for your originating country. Originating country will be the country whereby your goods are made, and the destination country, which is where you're going to. Okay. Then after that, you just key in your you can key in by your HSIAS code if you know it. You can try to key in with the keywords, like example, if you want to key in sesame oil, taking as an example. So I just want to share also that as the Tariff Finder is only for our Singapore businesses, so in case you are on a business trip in Tokyo, you won't be able to use the Tariff Finder if you are in Tokyo, because it's it will track your IP address, and then if they detect that it's not in Singapore, then you will be locked out. So this is something that company needs to take note of. And 2 is that we have companies who are MNCs, whereby their HQs are, example, located maybe in United States, and then they actually have to log into the company VPN, and they also have difficulty to use the Tariff Finder. So in order to use the Tariff Finder, you might want to deactivate the VPN to your HQ network that is in overseas, and then try using it. And inside the Tariff Finder, you can actually also save your queries and your finding so that you can use it at a later stage. Next slide. So for this, like I mentioned, Mendel is a German-based specialized information service provider lah. Okay, so next slide. So the 4 modules that I mentioned inside the Tariff Finder will be number 1, the nomenclature. So this will allow you to search for your product HSIAS code. 2, tariff and taxes. You will be able to find the related custom duties, be it the MFN rates or the free trade agreement preferential rates, or any other local taxes and charges related to the importing country, like example, value added tax or GST. Then you will also see the rules of origin, which I've mentioned repeatedly over here. So this is to help our Singapore companies, because we have companies who share with us that there's too many FTAs and I'm very lost, or I find it very tedious searching for every rules of origin for all the future agreements. So that's why the tariff finder is here to help the companies. Then import formalities. So the import formalities is also a feedback from the companies whereby they shared that they want to find some import information and they cannot and they have difficulty. So Enterprise Singapore has worked with Mendel to try to put in some high level information. So just take note that it's high level information because it's only based on 4 digits of the HS code, whereby you will be able to find import procedures or some of the documentations required into the importing country. So just take note that this information over here will help you in a way that you can verify with your importer, to check in with them, like use it as a benchmark, like in a way, like, you know, check in with them that, hey, I understand that, you know, these documents might be required. Can you use it and check with your importing customs or authorities? Yeah. Next. So I'm not going through this video as the slides will be circulated, but you can have a look at this video after this webinar. Okay, so before I hand the floor back over to Daniel, so my last few slides will be on the FTA resources that I think it might be useful for the company to look into it. Next slide. So if you have a keen eye for legal text, that means that, you know, you really like to read very lengthy, you know, legal information, you can go to www.fta.gov.sg, or you can just go to Enterprise Singapore website and search for free trade agreements. So it lists down all the legal texts for all the 28 free trade agreements. Singapore Custom website, honestly, I think it's very important. They do have circulars or notice on the operation certification procedures of each free trade agreements, and, you know, any of the updates that you can find over there as well. Next slide. At SPF, we actually offer one-to-one FTA advisory services, which is completely free, be it member or not. So you can write in to us if you have any FTA related queries, or if you're not comfortable, you can always, you know, go through HSIAS and, you know, and send us the query. Then lastly, we also do trainings like what Daniel said earlier, and also what my colleague Raghini has mentioned. We conduct trainings or seminars on FTA per se, like taking example ATIGA or EUS FTA, or we will go into industry specific. So if you're interested, you can always scan the QR code and join our mailing list. Yep, that's it. So this page is only just to share with you what we have done throughout this year. We also produce a guidebook like trade in goods or for the F&B sectors to help the businesses. Yeah, so thank you very much. I shall hand the floor back to Daniel. Thank you.
Hi, Daniel. I think you're on mute.
Hello, Daniel.
Yeah.
Daniel?
Hey, thanks, Ivy. Sorry, I forgot to unmute.
No problem.
Yeah, I think it was very comprehensive, although a little bit scary for those who aren't familiar with FTAs.
I'm so sorry. I tried to be as, you know, but I thought it's important information that maybe I should just bring it up. But I know it's too much to digest, but feel free to, you know, come to us if you need any help.
No, but very good that the SPF is willing to give one-to-one advice. But I think this, your presentation together with Raghini's presentation gives a very comprehensive picture. So yes, if we want to take advantage of the FTAs, it is very possible. But you really need to do your homework, but there's help. I think that's good. I think due to time, let me quickly just go into the next session, which is a panel discussion. And we have Raghini, Ivy, whom I've introduced, but there's also a special speaker or panelist rather, and that's Jason Chan from Union Chemical and Pharmaceutical Private Limited, Director of Business Relationship. So he took over stewardship of Union Chemical and Pharmaceutical in 1998. And his early part of his career was to establish a wide distribution for Harvest cough mixture and Yomo tonic. So today, these two products are widely distributed in pharmacies, medical shops, and online platforms in various ASEAN countries and in Hong Kong, Qatar, Lebanon, Sri Lanka, and Vietnam. And in Indonesia, in fact, the Yomo tonic sales has grown by 6-fold. So I think over the years, Jason has helped transform the company into the #1 OEM manufacturer from a manual Chinese medicine production to the leading contract manufacturer for TCM and health supplements with GMP compliant facilities. So it's assisted many clients throughout. So maybe I think since there's going to be this 3 people on our panel discussion, I'll quickly hand over to Jason to just share a little bit about Chemical Union and the key businesses and what are the key challenges that your company faces. And we really thank you for coming on to share how your company has overcome the key challenges and providing some tips for us here, all our members who are starting out. So can I hand over to Jason?
Yeah, thank you, Daniel, and thank you HSIAS and SPF for organizing this Zoom seminar. It's our pleasure to share some experience. For our company, we are an OEM company, as mentioned, and more than half of our sales comes from OEM, which is private labeling for our clients. And then for the remaining, there's a big chunk of it is into Indonesia sales, and a small chunk of it is local Singapore sales, and some other areas that Daniel has mentioned just now. So, and the other thing is, well, just now mentioned that what are the challenges we have. Well, when we are using the FTAs, I'll just quote some examples. And when we export our products into Indonesia, and as well as assisting our clients to export to various countries in ASEAN. So one of them is that the HS code, it may not tally with the importing countries. For example, if we ask our local freight forwarder, they say they give you 6 numbers. And with these 6 numbers, you thought that you can export to Vietnam. But Vietnam don't recognize this product as that HS code. They have a different HS code. So it will ding dong here and there. And then from there, we will come up with a new agreed HS code on both sides. Then we will proceed from there. So that is to say that there's a possibility that you apply the license, the certificates and everything, and came up with the wrong HS code. So that's very possible. So one tip is that make sure that the importing countries, they agree on the HS code that match with ours. So another challenge is that some of our clients or even ourselves, when we want to, just now Ivy mentioned what the add-ups, so there's a good examples that those materials that we can add up to the 40% we required. So many times our supplier may not be able to assist us because we need some information from them. We need them to give us some undertaking letters or so. So they may not want to assist. So that might be a challenge. But having said so, rest assured that if you are Union's Chemicals clients, we do happily access our clients to do so. So for example, if you're having a box printed in Malaysia, maybe just for a few $1,000s, just say maybe they might not want to assist and comply to provide all the documents necessary for you to add up to that 40%. So these are the 2 challenges we think you might be facing if you do it. And as for tips, we are thinking that if it is even if it's a small amount for a start, if it is a small amount or a small volume of goods, it's good that we try to enter into some countries and ASEAN countries just to know the procedures, because it is not so straightforward to, should I say that it's like, will we get it once done and over? So it's quite unlikely. There will be challenges and adjustment or whatever ding dong here and there before we can really export and enjoy the tax-free. So getting started, I think, is probably one of a very good step one that we all should try to go ahead. Yeah, that's about all. Thank you.
Thanks very much, Jason. Yeah, I think that's very interesting and very helpful because as I mentioned, it looks like it's quite complicated, but there's a lot of help out there. I think that's my takeaway. I think there are some questions that are sent through the chat. Maybe I first go to Raghini. Hopefully you've seen that question and you can just share with us the question and your response.
Sorry, Daniel, can I just add one more point to just now what Ivy has mentioned that I forgot to say just now. Is the process, the change of form. So HSA actually has told us as a manufacturer. So one idea of understanding the definition of manufacturing. So that's the change of form. For example, when it comes in, is in a herbal form, and we make it into syrup. So it's from a solid into liquid, is a change of form. So if it's coming in powder, we produce into capsules, it is a change of form. So that will consider as a manufacturing process. So another example, if it comes in powder form, we mix it and put it into a sachet powder form, powder to powder. So that is not a manufacturing process. So I hope it is helpful. Yeah, thank you.
Oh, great. Thanks, Jason. Okay, over to you, Raghini.
Hi, Daniel. So you're referring to the question asked about the intermediate products and premixes, right? Yeah, sorry, are you able to hear me clearly? Yeah, sorry.
Yes, correct. Yeah, from Sri Lata.
Yeah, so I think it depends, but you need to ask, it would be better to ask the Singapore Customs Authority for guidance, because they will be the approving authority. So for this case, you might check in with them actually. Yeah.
Daniel, I just further elaborate what Raghini has shared also. So remember that in one of my slides, I shared that number one, companies needs to register with Singapore Customs their manufacturing site. So, and I also mentioned that there is a possibility that Singapore Customs might pay a visit to the manufacturing site. So for such scenarios, right, companies, if they have in doubt, then Singapore Customs might pay a visit and then check whether the entire processing or the entire manufacturing goes beyond a certain substantial transformation or not. If it's not, then actually the company will not be able to apply free trade agreement. It's also similar to what Jason Chan has mentioned as an example, like, sachet to sachet is not. But if it's, from powder, then you transform it into maybe capsule, then yes. Yeah, but because Singapore Customs, they are the competent authority in Singapore for all kind of minimum processing and rules of origin. So for me, I find that it will be better for them to, it's much more better to check in with them.
Okay, great.
Yeah.
Thanks. Sri Lata also said she's got it. So thank you. So maybe over to you, Ivy. There were a couple of questions during your session.
Oh, okay.
Would you like to, just share with us?
Okay, so let me see. So I think there's one of this question that the company is asking whether they need to renew the PCO yearly. So actually the PCO is to apply via the TradeNet per shipment when you go out of Singapore. So going back to the steps that I shared earlier, number one, you need to register with Singapore Customs your manufacturing site. So if it's approved, it's valid for 2 years. Number two, you need to register with, you need to send your manufacturing cost statements to Singapore Customs, and that is only valid for 1 year. So if that is approved, then you apply for a PCO. So I just want to say, I just want to highlight to all the companies is that if there are changes in your raw material, like coming from like maybe initially your raw material is coming from Indonesia, now you changed it to India, or maybe there is changes in your prices, the value of the raw material that affect the entire calculation of original value content, you have to inform Singapore Customs, because it affects the percentage differs. And then there might be a possibility that your product can no longer meet the rules of origin and can no longer apply for a future agreement. So I hope I explained it clearly to the company. Yeah. Then any other query okay, so I think there's a question from Ryan for product owners who engage contract manufacturers who should apply for a PCO. Okay, so by right, you are a product owners and you engage a contract manufacturers. So technically to say that perhaps you are the exporter, you are bringing the goods out of Singapore. So the one that need to submit a manufacturing cost statement is actually your contract manufacturers, because they are the one who really manufacture the products. Okay, then as for you, you are actually merely an exporter. And if you are exporter and you're registered with Singapore Customs as a decorating agent, then yes, you can apply for a PCO. If not, you have to get decorating agent, which is like perhaps your forwarders, to apply for a PCO. I'm not sure whether I'm clear, whether you guys understand where I'm coming from or not. If not, feel free to drop us an email. I can re-explain, or we can do a call after this webinar.
Yeah, I think also, if anybody wants to ask a question, just yeah, I don't know what to put up your hand or just put it into the chat. Please, just if you're going to speak, just say your name and company and share the question. Yeah, any questions? Well, I had one earlier for Ivy, which is like
okay, sorry.
During the negotiation stage, do you think that the association needs to get involved? Because otherwise the HS codes may not cover our industry products.
Oh, well,
What do you
yes. So
feel?
I feel that if your members has raised a number of queries that they feel that their products needs to be considered into the future agreements, then it will be best to consolidate the feedback and then share with the ministries, because everybody knows that there's like 90 plus chapters of HS code, so it might be quite difficult for the authorities to consider all of it. So definitely they will welcome all feedbacks from all industry.
Okay, thanks. That's a good one. So later on, I'll find out from you how associations need to can get involved. Anyone with any other questions? I'm conscious of the time. I mean, there are some questions that I have, but let me try to figure out. Okay, so the RCEP question, is there a difference between RCEP and other ASEAN +1 FTAs? And is RCEP meant to replace ASEAN +1 FTA?
Okay, I'll take this question. So basically I think a lot of companies, some of them are confused. They thought that with the regional comprehensive economic partnership, as this is currently the biggest FTA in place that comprise of 30% of the world GDP. So they thought that it's going to replace all the ASEAN Plus FTA. Actually, in fact, not. The RCEP is actually an alternative future agreements offered to our companies that can consider on top of the ASEAN Plus FTA. So for sure, if the companies right now are already using ASEAN Plus FTA and they are very comfortable, they can continue to go ahead. But if they have like raw materials previously coming from Japan, Korea, or China, which they have never accumulate before, and then now they want to use it, they might want to consider the regional comprehensive economic partnership.
I see. Okay, so we need to look at the others. So I think given the time, I just want to thank everyone for taking part. You just keep sending us the questions. We will continue to answer it after the webinar. But right now, I'd just like to thank everyone and then invite you to take a group photo. And our secretariat is taking this gallery photo shot. So if you can quickly just turn on your videos for a second, and then we'll take a photo. Laurie, can you tell
Yep.
us when you're taking the shots?
Let everybody turn on the camera. I can take it another like a few
Okay.
seconds later.
Okay, so if everyone can turn on your videos for a second, Laurie will take a group photo for all of us.
Thank you so
Um,
much.
Yeah, don't forget to continue sending us the questions that you have, and we will try to answer it by email. There will also shortly be a survey sent to you. Please help us answer that as well. Yeah, let us know when, Laurie.
Okay, I think it's almost ready. I'll count to 3. Hang on, is everybody start adding the screen start to move? Okay. wait, still got someone coming in. Okay, please hold on the camera. 1, 2, 3, smile, and one more. Another one, 1, 2, 3, smile. Thank you so much for attending.
Thank you, everyone. We really appreciate your time today.
Thank you
As
very
I said,
much.
tell us, yeah, if you have more questions. All right. Thank you again. Thank you for SBF and especially SBF for going through that comprehensive slides. Could I just request that you put a number on the slides in case our people have questions, they can refer to the slide number.
Can, no problem.
Yeah, and thanks again, Jason. I think very helpful and illuminating that a company can provide your services, and also that it is learning to or helping us to learn how to use these FTAs. So thank you everyone. Appreciate you staying on to this time. We'll catch up with you again shortly. Thank you everyone for your attendance.
I'd like to invite everybody to submit the survey form, and then after that, I'll send the PowerPoint slide and the video link to you. Thank you. Thank you, Daniel.